Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply the classical technical analysis tools over the short term for the S&P 500 index, and we will try to answer the difficult question: is it a reversal or a correction? What's happening now over the index, first of all? And as usual, let us quickly revise the monthly chart just in case there is a new thing to be updated, and of course there is. We can see here over the monthly chart that we do have a peak which is clearly should be identified. This peak should be identified with a red line, and here we go. We should change it and move the resistance line a little bit higher, change the color to pink, somehow reddish, to indicate that it is over the monthly chart. And this peak is touching 4,800 levels, and that's the only update required over the monthly chart. Still, we do have great selling pressure, and sellers are controlled as it is easily appearing over the size of the black candles during the downward impulsive waves. Okay, let us check the long and the medium term picture over the weekly chart. We can see that the structure of the trend is pointing downwards. We clearly do have lower highs and we do have lower lows, which allows us to draw the downtrend line as well as the down channel line. We are now within this channel, falling channel, and any correction to the upside is considered a correction as long as the S&P 500 is below the important weekly resistance around 4,245, make it easy, 42.45. So whatever the style of the correction may be, if it did come, it will be considered short term against the prevailing trend, and we cannot consider it a reversal of the long-term downtrend unless it came with a confirmed pattern, maybe a double bottom, maybe a triple bottom, maybe a reversed head and shoulders. These are the only cases which may allow us to consider a correction to be a reversal in the formation, if it came with a reversal pattern. Otherwise, if it just rebounded in this way, if it bounced to the upside severely without taking time for some kind of accumulation or another, we will consider it just a correction. So we can see here that there are no any ideas of what we can say a reversal pattern in the formation. No reversal pattern formation process is taking place. Take, for example, we can see here we had a clear double top before the trend reversed to the downside. So it's too soon here to talk about any kind of reversal patterns that may lead to the complete reversal of the downtrend. I think 90% of any move against the prevailing trend to the upside will be considered a short-term correction against the prevailing trend, such as what took place here, or such as what took place here. Okay, now let's check the short-term details over the daily chart. We can see that the prevailing trend, the bigger time frame over the weekly, was downtrend. In addition, the shorter time frame trend is also in a downtrend. So the short term over the daily chart is also suffering from increased selling pressure, forming lower highs as well as lower lows, and for that reason we are under strong selling pressure over the short term also. Now we can see that we do have some kind of a bounce from the downtrend line, channel line, trying to target the downtrend line. This is a move, not a wave. So, and of course a move is way shorter than a wave. This is not a trend. So there are differences in sizes. If we say a trend, we are mainly talking about major structure, maybe something taking months, year, whatsoever long term. When we talk about a wave, we are just talking about something 2 or 3 months. When we talk about a move, we may be talking about something ultra short, 2 or 3 weeks for maximum. So this is a move against the short-term downtrend. For sure, this move is corrective, trying to target the downtrend line over the daily chart around the areas of 3,800, maybe 3,900. So there are any signs for now that the S&P 500 is going to reverse its major term downtrend or going to reverse its short-term downtrend, and the environment is bearish as long as the index is within this falling channel over the daily chart. And in order to have a good type of correction to the upside that may target further levels to the north, such as for example the nearest short-term resistance between 4,150, maybe 4,100. These areas are considered to be short-term targets for any correction, as well as a little bit higher target at around 42, 45. In order to reach these areas on a correction, we need the buyers to overcome the selling pressure around the downtrend line. We need a valid break above this downtrend line on a high volume with 2 or 3 days close above this falling line before we can gain acceleration towards the mentioned targets. Otherwise, as long as this downtrend line is valid and as long as the prices are below this downtrend, we are in a bearish environment over the 2 most important time frames, which are the long and the short time frames. Until then, the view is considered bearish and the tactics are on the seller's side, and the correction to the upside may be a chance to minimize losses for those who bought with higher prices, and it may be a good chance for virtual trading by going short against the market when it reaches the resistances mentioned. So we need to have a clear reversal pattern, which is not the case. So there is no reversal in the formation, and it's soon and too early to talk about such a kind of reversal for the time being, and we should wait for maybe a month or 2 in order to start categorizing any correction as a partial phase or a process in the formation of any reversal pattern. It's too early, too soon to talk about such a scenario, because at least from the perspective of time, it's very, very, very early to talk about such scenarios. Thanks for watching. Please subscribe, like, and share, and see you soon.